Hello, all. Jeffrey Beamer here, Senior Investment Strategist over at EWOTrading.com with your pro trader tip of the day. We are on the backside of earnings season, but that doesn't mean there's not big names that are coming out with their earnings announcement. And we trade earnings in two different ways. And this week, we're going to focus on those stocks that we anticipate to make a big move. Okay. And today, that is Target. All right. So we sent out, this is going to be trade ID 1129. This is for our alert service delta neutral breakout. And again, we look for stocks that, or we anticipate that these stocks will make big moves either up or down around their earnings announcement. This trade went out on May 20th. This happened to be a strangle, and I'll pull up the information that went out to our subscribers here. You can see the stock had been consolidating here in a little chop range for about 2 weeks when we put the trade on. This is not unusual going into an earnings announcement, but just looking at the previous earnings announcement, look at the big gap that Target had that last earnings cycle. Now, um, we do a lot more due diligence and research beyond just one earnings cycle. But what you can see here on the chart is that this gives us the opportunity. This is representative of a stock that you would look for is, has it done this in the past? Just that one basic thing is where what should determine whether you should put on a certain strategy. Okay. So if I was looking for Target to consolidate, I probably wouldn't want to use a strangle. But here we used a strangle. So the trade went out. The debit was just over $1,000 on our debit for the strangle. We bought the May 31st 160 strike call, bought the May 31st 155 strike put. So this was a $5 wide strangle. All right. And then the trade went out. And then this morning, I put out early pre market, I put out an alert to our readers that, hey, Target announced and things are not looking good. Stock is down well over 9% on the morning. And you can see that going into the open, it was really pressing that 140 level, okay, on the earnings announcement. And I said in this, we're closely, watch this closely on the opening. We dropped and be prepared to exit right after market open. And that is when the alert went out to go ahead and exit. And I updated the chart. And you can see here, we rallied just a little bit. We ended up rallying up to about 142 half and then pulling back. And actually, our readers got a better fill or had the opportunity to get a better fill than we did. So they profited around $380 to $400 on this trade. But for our official record here, we did a return of $320. That's a 31.68% return on risk. And that $320 also represents about 2.1% return on our hypothetical portfolio of $15,000. So given that I know it says 1 day in trade that deals with a 24-hour clock, and we put this on, say, late on the day or midday on the 20th, and then we took it off first thing today, that represented then that rotation didn't quite get to 2 days. But for me, it's a 2 days in the trade, and we generated a 2% return on portfolio, put $320 in our pocket, which is a 31.68% return on risk in just really 48 hours. So again, if you're looking for a stock or you think a stock is going to break out and break out big, a strategy that you can consider is a straddle or a strangle, and they do work great around the earnings announcements. So that's your pro trader tip for today. Come back next week, and I got another one for you. Everyone have a great trading week. Take care.